Are you interested in a dividend investing strategy? In today's video, we are covering the 6 common dividend investment strategies that you could be taking into consideration. Hello and welcome. My name is Peter B. and I welcome you here at My First Million, where we are achieving our financial goals together. So, I personally also fall into one of these 6 categories, and I will let you know later which dividend investment strategy that I am following. But first, huge shout out to PPC Ian, who gave me the inspiration to this video. So if you are considering dividend investing, check out his channel. He is a true dividend investor, and I'm sure you will profit a lot from his experiences. But first now, what exactly is a dividend? Well, according to Investopedia, a dividend is the distribution of a company's earnings. So whatever the company is paying to its shareholders, this is usually called a dividend. And Investopedia is mentioning earnings, but sometimes you will realize that even loss-making companies are still distributing dividends. Or many companies are distributing dividends that are higher than their earnings. So you want to take this definition with a grain of salt. So now to the 6 types of dividend investors. And just one thing to mention before we jump in. They can be overlapping. So maybe they're not clear distinction between those 6, but it could be more fluid that you maybe as a dividend investor will fall into one or maybe 2 or even more than 2 categories, which I will be covering now. So the first type of dividend investor is the regular dividend investor. The regular dividend investor is just someone who is saving his money and regularly buys dividend-paying companies, usually blue chip companies. So every month, with every salary, he's just buying dividend companies, and he's investing very regularly. So after a long period of time, his portfolio is growing bigger and bigger, and then it comes to a point that he can make a decision what does he want to do with his dividends. Usually at the beginning of this strategy, it makes sense to take all the dividends and reinvest them directly into your portfolio. But after a longer period of time, often those regular dividend investors use their dividends to cover a portion of their expenses. And maybe even long term, the dividends will be high enough for covering their expenses during retirement. So, and if you're considering the 4% rule for planning for your retirement, a regular dividend investor strategy can be very useful to live under the 4% rule during retirement. Now to the second type of dividend investors. And you will see now there already could be overlapping between the different types. And the second type especially I picked up from Ian, from PPC Ian. And I call this type the dividend stock collectors. So dividend stock collectors are investors who like to pick companies that they like a lot or maybe even love. And often those companies are the owner of brands that you love. So if you have some brands that you really love and you check out which company is owning those brands, that the brand owner is often a listed company that is distributing dividends. So compared to the first type, there's much more attachment between the investor and the company that you're investing in. And I don't use this video now to judge really which type is better or worse. It really depends on you. And you need to make the evaluation. What type is the best strategy for you? Then the third type of dividend investors is high yield dividend investors. So high yield dividends means bigger immediate cash flow for the investors. So usually who is considering this kind of strategy is someone who needs the cash flow now, who want to have a big cash flow now to cover a specific portion of the expenses or a big portion of the expense. But be careful, higher yields usually come along also with higher risks. Usually, especially out of favor industries with maybe not a very rosy futures have higher dividend yields. Also companies that maybe are cash flow heavy but maybe are cyclicals could be high yield dividend companies. So if there's a downtrend in the economy, the company might earn much less and might not be able to maintain this dividend. And sometimes a high yield could also be a dividend trap. You will talk about a dividend trap usually if a company's stock price fell significantly because maybe the situation of the company got much worse. So on paper it looks like the company is paying a very high dividend. However, why the company's stock price fell so much is because maybe the company is not able to afford the dividend anymore. Maybe the profits are shrinking significantly and therefore maybe they need to cut the dividends or even completely slash the dividends. So be careful when you're investing into high yield dividend companies. Then the next type of dividend investors is dividend growth investors. So as a dividend growth investor, you usually pick companies who already pay some dividend now, but if you're comparing the dividend yield to other companies, the dividend payments are very small still. But the strategy of a dividend growth investor is that he will early on invest into those companies which potentially have a very long runway for growth and a lot of potential in their industry or in their business model ahead. Often these kind of companies maybe are already highly profitable, but they only pay out a very small portion of the profits out in dividends. So over time they could pay also bigger and bigger portion of the profits in dividends. So these are both reasons that over time you will be expecting that the dividend is growing exponentially fast, much faster than other companies. So for this investment strategy, you want to have a very long time horizon. So at the beginning, you will get nearly no dividends, but over time, the compounding effect should be kicking in. And over time, you should be profiting from this dividend strategy. Then another dividend investment strategy that you can be using is buying dividend ETFs. So dividend ETF investors, usually they don't want to pick specific individual stocks because this takes time and there are also risks if you are allocating a big portion of your money just into one company. So as a dividend ETF investor, you're usually looking forward to, so as a dividend ETF investor, you're usually looking into reducing your risks through diversification. So the ETF is doing the diversification for you, investing a small portion of your money into many different dividend-paying stocks. But still, you will still be able to profit from getting regular dividends. Then, number 6, the last dividend investing strategy is also the one that I'm currently following. Basically, number 6 is just being a regular stock market investor. So I am mostly falling into this category. I usually don't care too much about dividends, but whenever I receive some dividends from the companies that I invest into, it's a very nice to have. And the dividends are improving my performance. In general, as a stock market investor, you can get a rate of return from two things. Either from the dividends that the company is distributing to you, or from the stock price improvements that a stock could be experiencing. So if a stock is increasing in its price, this could be a return for you as an investor. So a regular stock market investor don't really care too much from which portion he will get his returns. Whereas a pure dividend investor usually especially focus on the dividend side and maybe a bit less on the stock price improvements. Then one thing to keep in mind when it comes to dividends, usually dividend distributions are taxable events. So if a company is paying you $10 of dividends per share, usually you will not receive $10. You need to pay income tax on the $10. So maybe you will only receive maybe $7 depending on the income tax percentage that you need to pay. So the dividend amount listed on the company and that the company is paying out is not the final amount that you as an investor will receive. So just take this into consideration when you're planning your future with dividend payments. Are you a dividend investor? And if yes, which of the 6 categories you like the most and you are using for your own dividend investment strategies? Please share with us in the comments below. Also share your experiences and pitfalls of dividend investment strategies in the comments below. Thanks a lot for joining me today. I look forward to seeing you in the next video, and especially I look forward to seeing you winning financially.